Some trading stories, they just sound completely made up. But every now and then, a real story comes along that's just a masterclass in strategy, discipline, and seizing a once-in-a-lifetime shot. So today, we're going to break down one of the most legendary stories of all time.
So this is the number. This is the Fortune 1 guy built in just a few years, $153 million, a figure that puts him right up there with the legends. But honestly, the most insane part of this whole thing isn't the final number, it's where he started. Yep, he started with just $13,600. The journey from that tiny amount to a nine-figure fortune is one of the most incredible tales in modern finance. So how on earth did he do it? All right, so the man behind these insane numbers is Takashi Kotegawa, a Japanese day trader known online simply as BNF. His story blew up not just because he was so consistent, but because of one single, absolutely chaotic day on the market that would cement his place in trading history forever. So Kotegawa got his start back when Japan's market was in a total downturn in the early 2000s, a time of massive volatility. And look, he wasn't some Wall Street insider or a fancy hedge fund guy. He was a self-taught trader who just developed this incredible instinct for how the market moves and, more importantly, the discipline to follow his own rules without getting emotional. His success was all about skill, not just some lucky break.
Every legend has that one defining moment, right? Well, for BNF, his moment came from someone else's epic screw-up. It was a moment of pure chaos on the Tokyo Stock Exchange that he instantly recognized as the opportunity of a lifetime.
Okay, let's set the scene. It's December 2005. A brokerage firm called Mizuho Securities is listing a new company, JCOM. A trader makes a typo, and I mean not just any typo. This was the mother of all typos. The market instantly goes into a total meltdown. So while everyone else is running around like their hair's on fire, what's BNF doing? He's calm, he's analyzing the numbers, and he's acting decisively.
Okay, so this table right here, this breaks down just how bad the error was. The trader was supposed to sell one share for 610,000 yen. Instead, they accidentally put in an order to sell 610,000 shares for just 1 yen apiece. This is what's known as a fat finger error, a classic human mistake that has massive consequences. It basically flooded the market with shares that were practically free.
And here is the payoff. While everyone else was losing their minds, BNF saw this glitch for exactly what it was, a massive, massive mispricing. He jumped in and bought 7,100 shares at that rock-bottom price. As soon as the exchange started to fix the error and the price shot back up, he sold. His profit from that single trade? A mind-blowing $17 million.
You'd think after a win like that, there'd be champagne, celebrations, right? Nope. His reaction was just unbelievably calm and practical. He basically said that the market is brutal, and institutions aren't going to bail you out if you mess up. For him, it was just a simple reminder to be careful with his own trades. No party, just a lesson learned.
Look, making 17 million bucks off someone else's mistake is one thing, but turning 13 grand into over 150 million, that takes a real system. That JCOM trade wasn't a fluke. It was the direct result of a strategy he'd been perfecting for years, a strategy that put him in exactly the right place at the right time. The thing you have to understand about Kotegawa is that his entire philosophy was built around one thing: taking emotion completely out of the picture. He treated trading like a science. He developed this super systematic, rules-based process that he could follow with almost robotic consistency, day after day after day. So, what were these rules he lived by? Well, it breaks down into 4 simple steps. First up, he only touched stocks that were super volatile and had tons of trading volume so he could get in and out fast. Second, his sweet spot was buying after a sharp, irrational drop when the market was overreacting. Third, he wasn't greedy. He aimed for small, consistent wins, just 1 to 3% per trade. And finally, he was absolutely ruthless with his risk management. If a trade went south, he cut his losses immediately. And this right here, this was his golden rule, the one he never broke. He closed every single position before the market shut down for the day. Why? To avoid what's called gap risk. That's the risk that some crazy news could drop overnight and the stock would just open in a nosedive the next morning, leaving him with a massive loss he couldn't control. He was obsessed with controlling every single thing he possibly could. Okay, so a strategy on paper is one thing, but it's only as good as the person actually using it. And Kotegawa's real genius wasn't just in his system, it was in his almost superhuman discipline. The guy was a master of his own psychology. But let's be clear, He wasn't some unfeeling robot. He was human. Back in 2008, he invested in Lehman Brothers just 2 days before it completely collapsed, and he lost around $7 million. His reaction? He punched his monitor. It's a powerful reminder that even the absolute best in the game feel the sting of a huge loss.
But then you get this incredible contrast. Despite that emotional reaction to a loss, and despite having a fortune of over $150 million, the man was incredibly frugal. His diet was still pretty much just cup ramen. For him, it was never really about the money. It was about mastering the game. That extreme discipline in his daily life was a mirror of the discipline he brought to the market.
So why are we talking about a Japanese day trader from 2 decades ago? What's the relevance now? Well, because the market chaos he mastered, the volatility, the panic, the glitches, it's not just still here, it's been turned up to 11, especially in the crypto world.
Think about today's markets, especially crypto. They are defined by the exact kind of wild volatility and sudden price swings that BNF built his career on. We live in an age of flash crashes and whale dumps and chaotic algorithms. This stuff isn't the exception anymore. It's just how the market works now. Which, of course, leads to the big question. Could a JCOM-style moment, a massive technical glitch, happen in the crypto space? And the answer? It's not just yes, it's that it happens all the time.
And you don't have to look far for proof. I mean, remember in 2021 when Bitcoin flash crashed 90% on Binance US for just a few moments? Or the time a Bored Ape NFT was accidentally sold for 1/100th of its value because of a typo? Then there was the guy who sold $90,000 of ETH for just $9,000 because of a decimal error. These aren't just stories. These fat finger mistakes and flash crashes are real, and they happen all the time, creating huge opportunities for traders who are calm and ready to act.
So when you boil it all down, the key takeaway here isn't just about one crazy trade. It's about a mindset that knows how to turn total chaos into a massive opportunity. BNF's story is the perfect example of that old saying, luck is just what happens when preparation meets opportunity. His fortune wasn't made in a single day. It was earned through years and years of disciplined practice, which is what allowed him to execute perfectly when that rare, chaotic moment finally showed up. Because here's the thing we know for sure. Markets are run by people and code, and both are going to make mistakes. The next JCOM moment, the next flash crash, the next fat finger error, it's not a matter of if, but when. So the real question for you is, when it happens again, will you be ready? Will you have the discipline to see it not as a disaster, but as the opportunity of a lifetime?